Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis Podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, member Philly's Finest shares his path from a liberal arts college to working in Nomura's structured products desk. How he got promoted to associate, how much he was paid, and why he decided to leave it all behind to start his own company. Enjoy. Philly's Finest, thanks so much for joining the Wall Street Oasis podcast.
Yeah, thanks for having me, Patrick.
So it'd be great if you could just give the listeners a quick summary of your background.
Sure. So I went to, I guess you'd call it a non-target small liberal arts school and jumped into an internship in sales and trading, which converted into a full-time offer at Nomura. So I joined their structured products desk to be a sales guy. Spent, I guess, 3.5 years doing that before leaving to start my first startup. And have been in the startup world ever since.
Cool. So let's go back to the liberal arts college because I went to one as well. I was at Williams, so we have a little bit in common there. So was there any, in terms of like how you landed that internship that sales and trading internship that turned into a full-time offer? Can you tell me a little bit about that? Was it junior year, typical, did you start your sophomore year? How did you know like trading was something you wanted to do?
Yeah, and I'd actually be curious to hear your thoughts about this because I think that obviously Williams, you probably consider it a target school at this point, but we did have a bit of an on-campus presence.
Mm-hmm.
So I started sophomore year and got an internship in private equity, just basically through networking. But one thing that I've kind of seen is as the recruiting cycles moved earlier and earlier, it's almost the kids at liberal arts schools are at an advantage. I don't know how the numbers exactly work out, but for us, we had Barclays, Goldman, Nomura, and a few others on campus. And given how many fewer kids are competing for those spots every year, it seems like those that were smart and networking and had their shit together could actually seize those roles over competing with maybe hundreds of kids at a bigger school that might be a target.
Yeah, no, I think that's fair. I think at Williams it was a similar thing. Although the ties into Wall Street, into finance in general, are pretty strong from Williams. I'm sure for your school as well. But yeah, we did have a lot of on-campus recruiting. The timing of when I graduated wasn't great. It was 2002, so it was right after 9/11, the recession. It was pretty bad. So, but in other more normal years, I would say that if you're interested in it and you go after it, it's a pretty good place to be. Small kind of liberal arts college.
At places like Williams and Colby, the likelihood that an alum will talk to you just because you
Mm-hmm.
have that on your resume, I think it increases a lot. I know friends who come from these bigger schools, and the alums that they're trying to network their way into they don't have the time to talk to every kid that reaches out.
Right.
But for example, whenever anybody reaches out to me, I'm always happy to talk to them just because of how much smaller it is.
Yeah, no, for sure. So you kind of did your own hustling for sophomore summer. Sounds like you got a private equity internship. Was that just like through LinkedIn? How were you doing that networking?
So that was networking actually.
Like alum and stuff like that? Or friends and family?
From alumni networking into a conversation with someone who an alumni put me in touch with, who's actually from Philly, where I'm from, as you can tell by the username,
Mm-hmm.
which converted into the internship offer.
Got it. And so what did you do there? Was it mostly just like busy work or just helping them do like review sims and stuff like that? Or
Yeah, I would say that shop is much more forward-looking and uses their interns because they think that eventually it'll be good for the interns to appreciate them having had that opportunity.
Mm-hmm.
So it was a lot of, reading sims and bringing notes to them, even if they were on past deals, and just trying to learn about the process. So they were kind enough to put us through several of the Training the Street, Wall Street Prep sort of modeling courses, and we're really not trying to use us in the traditional sense where you'd use interns for grunt work. Obviously, a lot of us were actually sophomores, so
that's great.
Probably wouldn't be very useful to do that anyway.
Awesome. Sounds like a great experience. So you finished that up. Did you feel like that internship really helped you in the summer analyst recruiting, the junior year or early junior year?
Yeah, I mean, I think that what I got most out of it was just sort of learning what to say and what not to say, and just general exposure to the terminology, which, no matter how much you study in school, it's pretty hard to get how people actually use the terms that we use in finance.
Right.
And I think that it gives a sense of humility that, college kids often think that they know so much about trading or IB from what they read on Wall Street, Oasis, and everywhere else. And it's a bit humbling to be amongst the actual professionals.
Yeah, and then you see how little you actually know.
That's exactly right.
Yeah. So I think, so you kind of head into junior year, is trading kind of on your radar here at this point? You did a private equity internship. Was IB there? What was the thought process going in there? And then curious, was it still on-campus recruiting? So the firms were coming actually on campus for the interviews, or was it all like, I don't think the video interviews had come out yet, right? So it was still kind of, they were coming on and doing the interviews right there, correct?
Yeah. So for me, I was still a bit undecided about whether I was going to go the IB route or the sales and trading route. I was basically just taking every interview that I got. Yep. Just because Colby, the easiest way in for me and for my peers was the seats that were set aside for Colby kids. So, they had a defined number of those for IB and a defined number for sales and trading. So I just applied to all of them basically.
Got it.
And then
so was it around like 10 resume drops on campus around that, or 20?
Yeah, exactly.
And how many do you think you were how many think you converted to first round?
A little more than 10. So I think I had 15 interviews. And
so you had a good conversion. You had a really good conversion from resume drop to interviews, first rounds.
Yeah.
Why do you think that was? Why do you think that was? Just the internship, the private equity?
Because by then I had done so much networking that I think I didn't do a single resume drop that was just into general pool. I'd always had someone who I'd networked my way into, try to put a note on my resume. Mostly
through alum still?
Mostly through alums, yep.
And again, LinkedIn, or just was the school giving you just their contacts directly and you're just emailing them?
I think that at least for us, and I'd be curious to hear your thoughts on this, but the alumni webpage and resources are totally underutilized. I think it's a lot more compelling to receive an email that you can see someone's put some thought into versus LinkedIn, which honestly is obviously a great medium for connecting with people, but it runs the risk that whoever is on the receiving end just isn't checking it that often.
Yeah, fair. That's fair. Yeah, I think LinkedIn's a great place if you can't find it elsewhere, but if you can get the emails, it's more valuable. The open rates are probably higher and more frequent, obviously, especially if you structure it in such a way where it's short, punchy, to the point, and it's not like giving them your life story. Which is a big mistake.
Under 60 words.
Yeah, exactly. So you're coming into you're taking a bunch of interviews. You had like around 10 first rounds, or 15 first rounds. How did it go in terms of performance, IB versus sales and trading? Did you feel like you were underprepared, overprepared? Tell me a little about that process and how you improved.
I definitely feel like the first few went very poorly, and the results indicate that because I was not invited back for super days, etc. there. But I think I did better in the banking interviews than I did in the trading ones, just because having been on the other side of those interviews, and I'm sure you know this as well, it's when someone in sales and trading is unprepared for an interview, and oftentimes someone just grabs you and says, hey, can you do these 5 interviews? You don't have defined questions as you do in investment banking. So you're just sort of asking whatever it might be. And if you get a trader that's having a bad day, as I did in several instances, you can really get smoked.
Yeah. So they're just testing you. They're asking you like all these crazy brain teasers and stuff, or was it more product specific about what they were trading to see what you knew?
It was a lot of brain teasers. I was actually pretty surprised,
Yeah.
and I think it's probably changed since I was interviewing. But
No, there's still
there were
brain
just a couple
teasers.
ones that were,
There's still brain teasers. They're still there. Maybe less so, but so okay. Tell me a little bit about. Just so, did you get multiple offers? Was Nomura the one offer you got, or was it like the last? At least for me, Rothschild was like my last offer, my last interview. And granted, it was 2002, so it was a tough year, but it was literally the last chance I had, and I grabbed a seat. Was it similar to you?
so when the dust settled, I had Nomura on the sales and trading side and one banking offer that I would say is, not bulge bracket, but, sort of the next tier down.
Yep.
And having talked to, at this point, probably 200 people in the industry, and sort of knowing that I wanted to use this as a stepping stone, opted for the lifestyle, and what I would learn on the trading floor. Obviously, you get more responsibility quicker if you can politic your way around the trading floor than you do in investment banking.
Talk to me about that. Talk to me about that a little bit. That's interesting to me. We haven't had too many people. We haven't had too many people in S&T on the pod. We've had traders and stuff like that, but not like, not the sales and trading the sales side as much. We've had more like prop traders and commodity traders, but not so much like the, people who are, like you said, having to politic around. I'd love to hear a little bit more about that so people can get a better sense of what it's like day to day.
Yeah, I mean, I think that one thing that goes pretty unsaid in sales and trading is, especially at a bank like Nomura, where there's a huge range of quality in the trading desks. We were pretty strong in mortgages, we were pretty strong in rates. Not so much in FX at the time that I was there. And, you don't always get your choices for when you're doing the rotation.
Got it.
And for me, as I was doing the rotation, it still wasn't clear who had headcount, who didn't. So they ended up having to scrap all of that. I didn't actually rotate through mortgages during my internship. They made everyone do a full set of interviews when we got there. So I think number one, if you're going into sales and trading, I think my advice would be to do a ton of diligence on what desks your bank is strongest at. And from there, within that desk, what pods is there the most upward mobility in? So I think you can often find examples where there's a senior trader trading some product. He might only have one junior guy. And if you go in and take that junior role, you'll have a lot more responsibility just by definition of the team being lean than you would being, the sixth guy on a bigger products desk. So I was fortunate enough. I impressed, I guess, one of the top producers who took me under his wing on the sales side of things, and then sort of coached me on what to do when there's accounts up for grabs, how to make sure I had sponsorship within some more senior levels of the firm. And it's those kind of things that I think, as you're paying your dues in investment banking, so to speak, are a lot harder to access.
Can you tell me a little bit more about the sales side and how students should think about that in terms of, trading is trading, right? There's flow. You're executing orders, stuff like that, right? Tell me about the sales side in terms of what your day to day is like. So can you give me an example of like a day you'd come in, what would you be doing?
Yeah, absolutely. So I think that, much like trading, the first year of sales, you will not be doing anything that's particularly value add until you learn the ropes. I think it's hugely variant in terms of products, but for mortgages, we covered such a range of products, from non-agency to agency. CLOs fell under mortgages, so did all asset-backed securities. So you're trying to arrange things and show, at this point, your boss's client list, things that make sense from a risk and yield perspective. So you're actually sort of being the filter of information. And you're going through the products that you have on offer and the products that are out there in the market available for bid, and trying to match those up with what your clients will be looking for, both on the real money side and on the fast money side. So you're trying to digest and sort through and make sure that they have the best quality of information for the products they care about.
So tell me about,
And then,
let's back up on that, because I think let's unpack that a little bit. So specifically, when you're like looking through what your boss's clients want, is that like when we're talking clients, we're talking what, Fortune 500 companies, everything from pensions, endowments, what type of institutions are the clients typically? Hedge funds, like what? How should I think about it?
so
Would that be prime
our
brokerage
desk,
mostly?
I think our desk was a little bit unusual in a sense that most of the salespeople covered both real money, meaning pension funds, money managers, insurance companies,
Yep.
And hedge funds and the fast money clients.
Mm-hmm.
So, we would cover a lot of the big West Coast money managers, insurance companies, and then on the flip side, the people that are looking for higher yield would be the sort of New York-based hedge funds.
The New York-based hedge funds. Okay. And so specifically, when you're looking for information, is your boss telling you like, hey, we need this type of issue, we're looking for this type of security, this type of yield, and you're looking, you said, to what's out there on offer, but also what is being created in-house? Or like how should I think of that? Because explain it to me like I don't know anything, because I really know very little about sales and trading. So explain it to me, because explain it to me as if it's like my first day on the job, like the basics. So I come in there and you're like, this is what we do. We are helping our clients get into the right type of risk reward securities, or how should I think about it?
That's exactly right.
Okay.
And especially on the structured products desk, you're taking something and you're breaking it out into multiple tranches. So you have a senior, lower yield, less risk tranche, obviously, that, if we're talking about this at a super high level, would be directionally a fit for someone who isn't necessarily looking for a higher risk levered return. And then the bottom piece of that, your subordinate tranches might have a much higher yield that would be a better fit. And that's, I guess that in a nutshell is sort of the purpose of structuring.
And as a first year, you're really just learning a lot of that, learning the ropes. As a second year, how does that change your responsibility? Like, how are you actually, what tools are you using? Or is it all in Excel? Like, what is it all through Bloomberg terminal? How should I be thinking? Like, how are you screening all this data coming in?
Yeah, I mean, it's a lot of Excel. It's a lot of Bloomberg data. At this point, every trade your desk has ever done with a given client is going to be in your firm's record.
Yeah.
So I would say that the people that go above and beyond actually will pull up the bonds in Bloomberg, will run the bonds for a non-agency's case. We use a tool called Intex and try and figure out exactly why those clients like those particular bonds. What are the characteristics that made those appealing, and can you replicate that as you're looking and running bonds that are coming out more continuously? And
you said coming out, that's from other banks, that's from you guys, that's from everybody?
Yeah, I mean, your bank is going to create some, especially on the agency side of things.
Right.
You have clients that will be selling them on what's called BWICs, which is bid wanted in competition, which is basically an auction.
Got it.
And then you're constantly working, at least when I was there, for out of comp trades, which are bonds you can pull out from one client and sell to another, and not have to be fighting everybody on the street for that allocation competition.
Fair. Okay. Thank you for that kind of a little mini deep dive, I'll call it. So tell me a little bit about so you were kind of directly below kind of somebody who was doing well, so a senior person who's doing well, and so you had a lot of exposure. You said you impressed him. How did you impress him early on? What do you think set you apart to get that seat?
It's pretty funny, because I would say for the first year, I didn't impress him, and we had a bit of a contentious relationship because he thought I was underperforming. And then something flipped, sort of at the time that you can start to get your feet wet and actually understand what a bond is and what you're doing. Yeah. And I would say that the number one thing in sales and trading is you just cannot be afraid to be the guy that's trying too hard. I told this to interns all the time. It's like, sure, you might get laughed at from your friends if you literally run down the street to go get that lunch order or whatever it is, but people are going to know you as being the guy who's willing to do that, and willing to go that extra mile. So I think what sort of flipped our relationship is when he saw that I was willing to put in the effort to see what his clients wanted, what they were doing, go above and beyond to make sure that everything was in order for our team's pod, from trades to color being sent out to our clients. And I think more so than anything, it's just about how you position that with seniors in sales and trading. It's a lot. You have a lot more room to go outside and find ways that you can add value than you do in banking, because a lot of these sales and trading personnel are people that have been around the street for a while. So
what do you think?
Learning things like how.
Yeah, what do you think flipped? Like,
Sorry.
what do you think flipped suddenly where you started figuring it out? Hey, it would be really good. He'd actually prefer. Did he just tell you, hey, you need to start giving me some more like feedback? You need to start digging deeper into like what my clients want. Add more than just being a process monkey. Like, what was the feedback he gave you, or was it just something that you grew into?
No, I mean, it was a lot of the feedback that he was giving me, and I feel like at a certain point, you stop becoming afraid of your own shadow. You stop worrying that you're going to screw up a trade. Mm-hmm. And I think what he appreciated and what ultimately I appreciated out of my junior people was when they wouldn't say, hey, can I show this bond to so-and-so, or hey, should I do this? They wouldn't be afraid to just go do it. And oftentimes they're going to be right. And when you're wrong, you can get shown, sometimes disciplined, but mostly shown why you're wrong, which actually proves to be a lot more valuable than just constantly asking for permission to do something.
Got it. So it's almost being a little bit bold once you kind of feel like you have the ropes and like doing things that make sense. Like when you got it. Okay. And just having that confidence. Got it. Okay. That's helpful. So you're kind of going through this, you're getting your feet wet, you're starting to perform better. Your boss is happier with you. Does pay take a big jump in that in terms of bonus? And do you mind talking a little bit? It can be ranges in terms of pay. I know it's pretty standard, the bulge bracket pay coming out of school, but then, bonus is a little bit more of a black box.
Yeah, absolutely. So for me, the analyst years were pretty defined. I would say that Nomura is probably a bit more levered in a sense that if you do really well there, you can get paid really well. Mm-hmm. And if your desk doesn't, or you're not doing particularly well, that can also reflect on the downside. So
meaning a donut, meaning you can end up with a 0 if your desk does really poorly. But you get really.
I haven't heard of any analysts ending up with 0s, but yeah, it's certainly more susceptible to swings in the market.
Fair, okay.
But you get the benefit of the flip side of that as well.
Yeah.
So my analyst years were pretty defined, standard street range, and then the associate year I got one full associate paycheck there, mm-hmm. And that's when it took a big jump.
And so like 250 plus or around there. In that range?
Yeah, 250 to 350, I would say would be. I mean, okay. was fortunate enough to have a good year at the bank that year.
Okay. Fair enough. So it looks like you were promoted then, right? From after your second year, straight to associate.
I was, yeah.
Yeah, and so tell me about the thought process of staying on for a third year.
I mean, for me, and I think I'll put this in the AMA, but mm-hmm. I was totally happy there. I think that if you end up in a situation where you have a mentor that really backs you, you have a good client list, your day-to-day in sales and trading is pretty awesome. It's not susceptible to deal flow related 100-hour weeks, etc. I love the work that we were doing. So it was really a no-brainer for me at that point to stay on for another year.
You felt like the work was interesting enough and diverse enough and you were learning enough still in that third year where it made sense to stay. And plus you knew there was going to be a pay jump too. So, I mean, that helps with the promo.
That always does help.
Yeah.
I think that as an associate in sales and trading, especially for something that has as many products that fall under mortgages, once people sort of trust you have a bit of freedom to go out and spend your time on a given day on what products you think are interesting and going to be value add for your clients. And to me, it was that sort of
creativity,
entrepreneurial aspect of it that it was super fun.
That's cool. So you basically, and is the associate promote, is that pretty standard now, going 2 years analyst up to associate, or should it, what should I think of in terms of like the split between people who go analyst straight to associate versus like MBAs? or is it more like CFAs in the trading side?
I think in sales and trading, it depends very much so on the bank. At least when I was going through this, Nomura was pretty standard 2 years as an analyst into an associate. But I know that some of the bigger banks make you do 3. I think Goldman is still 3, if I'm not mistaken. So it's bank specific, but at the end of the day, it's generally 2 or 3 years.
Got it. And then what would you say in terms of percentage of associates that are like MBA versus not? Is it like pretty small percentage on the trading side?
Yeah, for us, it was a pretty small percentage.
Like more, really is there more
CFA?
Is there more CFAs or just nothing, or just people who go straight through?
I would say that there are definitely more CFAs than MBAs, but most of the people were just kind of rising through the ranks.
Fair. Okay. So you're there, things are going well, you're learning, now you're getting paid pretty well. Why leave?
Yeah, this is something that I really struggled with.
You're just starting to get paid, man. Come on. And you're enjoying your work. Was there?
I know. Everyone told me I was crazy.
Looking back, were you crazy, or have you done well?
No, I think that for me, I'm really happy with the decision. Cool. But I think that had a few things not gone my way, I might be singing a different tune at this point.
So tell me a little bit about your first startup kind of coming out of sales and trading. Like what made you confident enough to actually make that leap to go from, well into 6 figures to potentially nothing?
Naivete was definitely the first thing.
Fair. A little bit of misplaced optimism.
There's definitely some misplaced optimism.
Yeah. Okay.
At the time, so I'll disclose here, Patrick. So I'm working on a startup right now called FindEggs, which I actually had the idea for while I was on the trading floor. At the time that I was thinking about quitting to start FindEggs, a friend of mine was executing a pivot on Seated, which is a restaurant technology company, and he asked me to join in what we both thought was going to be a short-term capacity, a few months consulting agreement to help him figure out how to get the sales process fired up there. Ended up staying there for almost a year and a half, and seeing the company through a couple of major funding rounds.
So tell me a little bit about that in terms of deciding to join them and then having ended up kind of sticking around there longer than you anticipated. Tell me, and was it initially viewed in your mind as a kind of a bridge to what you wanted to do? Is that fair?
Yeah, I mean, I considered it to be sort of a stepping stone, getting my feet wet, because at this point, I knew very little about startups.
Did they already have funding? Did they already have funding when you joined?
They did. Yep.
Okay.
So it was a bit less risky than jumping in and trying to raise my own round with no startup experience, and just sort of a Wall Street resume to point to. And that I'm enormously thankful for, because if I had tried to start FindEggs coming right out of Nomura, I am very confident that we would have gone belly up.
Fair. So what did you learn? What did you learn at Seated? What kind of lessons do you feel like have been helpful now that you've kind of been a year in at FindEggs?
Yeah, I mean, I think the one thing about startups that is extremely similar, and I would argue even more palpable, is the effects of networking. So, I would say at Seated, I learned the ropes and how to fundraise and how not to fundraise. And that in the same way that if you're going to break into a bulge bracket from a non-target school, you really need to have some sponsorship or some really good story. It's the same in startups. Trying to raise money, and so many people try and raise money by cold emailing VCs, and this is why I say networking is even more important, because that really just doesn't work. It's almost a test of entrepreneurship if you're able to get a meeting with a VC through a warm intro. So it's really networking dialed up to 11. So that side of things, is something that you just required to make the business run. You need to have money in a startup unless you've got some product that's already operating at a break even. So learning all about that, and then learning just how much goes into a consumer business, from growing customers to thinking about your unit economics, doing everything you can to onboard businesses. I mean, that is a side of things that the Wall Street mentality can prepare you to learn, but certainly doesn't prepare you with the knowledge for.
Tell me a little bit on the marketing side. Did you guys, the unit economics, I'm sure, played into that in terms of cost of customer acquisition versus, the average customer lifetime value, all that good stuff. Is that what you're talking about in terms of?
Exactly. Yeah. And when to pull those levers, and make sure those unit economics are above water.
I feel like that's almost impossible. I feel like it's so hard to do. It's so easy to say, oh, here's my cost of customer. But for us, it's like, so I know for Wall Street Oasis, especially, it's super hard for us. We get so much organic traffic, so much natural traffic, that it's, our cost of customer acquisition is actually incredibly low, but we also have a very low customer lifetime value, because the majority of people who visit the site are just browsing and getting information and saying thanks and heading on their way, versus having something where it's a specific product or a specific transaction you're looking is like where the business is centered. I think it's almost easier in the sense of like whether it's working earlier, versus like trying to build a community and then trying to monetize. You're just like literally from day one, it's like you have the product and now who's willing to pay for it, right?
That's exactly right. I mean, it's a totally different calculation when things are defined versus undefined. But I mean, like what the example that I'm giving is, you and I obviously have thought a lot about this at this point, but stepping out of a job on Wall Street, even if you have a serious interest in startups, you're generally not going to be familiar with how a VC is going to think even about what we're talking about right now. And it's sort of that exposure, learning like, hey, we have a low customer acquisition cost because a lot of this traffic is organic versus, what's our LTV on the other side of that? It's almost similar to, lingo that we use in bond trading or investment banking. It's a different language that's spoken sort of in venture communities.
How would you suggest people learn more about that in terms of learning that language? Is there places they could go?
Yeah, I mean, in the same way that I think everybody who's interested in Wall Street should be reading Matt Levine every morning. Ben Thompson is sort of his counterpart in startups. They're two guys that I go out of my way every single day to read when they're publishing. And from there, it's the news sources that are most startup-y and that'll cover the lingo most. So in the same way that you'd probably tell people, if you want to familiarize yourself with the lingo of finance, you should read the FT or Wall Street Journal. TechCrunch is sort of that catch-all, reading what comes out of all these venture blogs. So the preeminent venture firms are going to have dedicated blogs. First Round Review is really good, which is First Round Capital's blog. And those just have a wealth of information, especially because it's coming from this side that's actually doing the investing.
Very cool. So when you decided, you ended up staying at Seeded for a little bit longer than you expected, almost a year and a half, you said. What kind of made you jump when you did? Did you was there a round completed and it was like a good time to kind of jump? Or I assume you still have some ownership in that business and you're helping them kind of time to time, or is it like a clean just buyout?
No, Bryce remains one of my best friends. We looked at the business and sort of what we had shaped it into, and there was I guess you call it a funding event that made us have confidence that the business was on the right trajectory. And he knew that I had wanted to become a CEO and a founder myself. So was fortunate enough to take care of me and let me continue to be an advisor there. And leave with most of my shares. So it was a good outcome, and certainly not a clean break. I still incessantly check on him and the progress and the team.
So you still have some ownership there.
Yeah, that's right.
Great. Okay, and so you made the jump. How was that conversation with? I mean, you guys are good friends. I know when I started Wall Street Oasis with a good friend of mine, I know it was a tough conversation I had to have in terms of like early on. I mean, it was super early. It wasn't making any money, but I knew I wanted to kind of keep going with it. And so I ended up buying him out. Was it a tough discussion with him, or is it something where you guys had already kind of discussed this kind of coming in?
No, I mean, was in a sense a tough discussion because when I joined, I was not supposed to be nearly as much of a figure there as when I left.
Got it.
So I started on what was really supposed to be a consulting agreement to help get the restaurant sales side of things organized, and I left as a co-founder and the COO. So as we were just putting our heads down, things are going well, and you start to take some ownership over that, and you want to see it through to the end.
Cool.
But we'd always talked about me leaving to start Find Eggs. It was a question of when. So I think it's never easy. We work super well as a team, but that conversation had been something that we were open about, which I think is probably the thing that has been the most positive for our relationship, is that it was not a surprise.
Why not, if things were going well, why not stay on with him and just get, because you wanted to be the number one, or just because you felt like this other thing was eating at you in terms of like you had to go for it? What was it? Because I mean, if at least personally, I know if I was running a business with one of my good friends, we were both doing it full time and things were on a fast trajectory, I'd almost want to stay put. Was it just because you had this other idea, or like, it just surprises me that it does look like they're doing well. It surprised me like that you would jump and take all that extra risk on all over again.
Yeah, I mean, I think part of it was looking at sort of the idea and the drivers behind Find Eggs. I really thought this was a model, and there's a lot of similarities to the seeded model. Just a totally different space. I thought the timing was right. I think that directionally, Find Eggs is in the rental real estate space, and you've seen a huge rise to prominence of the rental real estate space over the last 10 years, and technology just hasn't caught up. So we thought we had a really interesting model. We had a funding round pretty much already lined up, and just thought that this space could be one that you could apply a similar sort of dynamic rewards and loyalty program to. That really gave me the confidence.
No, I think you want to tell people what it is a little bit? I think it's genius, but you can go ahead.
Yeah, absolutely. So Find Eggs is basically rethinking the entire renter and landlord dynamic. Most people don't know this, but 80% of the US is still paying their rent physically. So most of that is by check, cash, or money order. So Find Eggs' first product lets anybody pay their rent from their smartphone. And has an integrated rewards platform, so you'll actually get rewards for paying your rent. And ultimately, what we're trying to do is be the one software company that dominates every aspect of renting an apartment, from finding it, applying, signing your lease, all the way to paying your rent and daily interactions. We just know that this is such a pain point for consumers that we can solve first.
Yes, it is.
It gets our foot in the door elsewhere.
Cool. Is it proprietary, or are you allowed to talk a little bit about how you actually execute that? Or is it like, in terms of the software, is it some sort of software where it's like a bill pay type function? Like, because I know I can send checks through like my online banking. Is that the idea, where it's just people are putting in kind of?
No, it's actually quite similar to that, and it's interesting. We've taken the process of getting your check to your landlord, and we've automated that with a much better user experience than your bank bill pay. As well as an integrated rewards platform. And then when you're looking to move, you can actually take your history of rent payments and share that with your next landlord. Cool. So it's quite similar to bank bill pay. The difference being that, it's our core business and our first business. And banks, this is not a feature they want to promote. They don't make any money off of bank bill pay. So the software generally reflects that. It's pretty clunky. And,
yes, it does.
Unintuitive.
I use bill pay plenty of times, so I know it does. Cool. Okay. Well, man, anything else, just any advice you have to people who are, looking back at either your younger self, advice you'd give yourself, or advice you'd give to the younger people in the community in terms of career, startups, anything, before we call it?
I think the one thing that has certainly been reflected on Wall Street Oasis that helped me really early on to discover is, I owe everything, all the modest achievements that I've had in my professional career to the power of networking. And I think that, no truer words than, it's 100% of the shots you don't take. I think that the first step is to really refine a message and run it by a lot of people and make sure that you sound humble and eager, and sending that to as many people that are 1 or 2 degrees removed from you as possible will lead to some really interesting conversations.
For sure. Let's end on that. I think humble and eager is maybe the title of this pod. Anyways, man, thanks so much for taking the time. And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, patrick@wallstreetoasis.com. Until next time.